Hello traders and welcome to today's video. Without much talking, today I want us to discuss about market structure. And in case you didn't know, market structure is what you see when you look at the market. The first thing that you see when you look at the market, of course, you see the candles, you see the chart and everything. But when you talk of a structure, it's just like a human being. We have somebody who is huge. That person has a huge structure. Somebody who is tiny has a tiny structure, okay? And that's what I want us to discuss today. But when it comes to the market, we have three types of market structure. We have an uptrend, downtrend, and a choppy market or a ranging market, okay? An uptrend means the market is going up, just like the line I'm drawing right now. It's good you put in mind that the market doesn't work on a straight line. Never will you ever see a market going straight like that. But this just for illustration. We will also go to the charts and I will show you an uptrend market, downtrend market, and a ranging market, okay? So this is an example of a downtrend. Let's label it to, meaning the market is going to the downside, okay? For the uptrend, the market is going to the upside. Downtrend, the market is going to the downside. So let's just label this. The third type of market structure is a choppy market, and this is how a choppy market looks like. The market is going up and down on the same place. It's like something that is clustered on the same place. And another name for a choppy market is a ranging market, okay? For me, I avoid ranging markets. I don't trade choppy markets. Anytime I go to the chart and I realize that the pair that I want to analyze is choppy, I just shift to another pair. And just to mention pairs that you want to trade. I know as a beginner we have so many pairs on our watch list. 10. I saw someone with like 30 pairs to analyze or to trade. I don't know how you will master 30 pairs. I even don't know how you will master 10 pairs. I even don't know how you'll master 5 pairs. It's so difficult. Like, how genius are you, by the way? How can you master how different 5 different markets behave? It's so difficult. As a beginner, I understand. As a beginner, I understand when you have like 10 pairs. But believe you me, the more you stay in the game, the more you'll understand, this pair, we divorced. This pair, we are not friends. This pair is my BFF. This pair is my, okay? So you'll keep eliminating here. So you'll keep eliminating the pairs until you remain with like 3 pairs. 3 pairs are good to go. And I don't know. I've not yet posted that video, by the way. In the next video, I'll talk about currency pairs because right now we are on the market structure. Next, we are going to currency pairs, okay? So just stay tuned. That's where I am talking about the number of pairs that you need to have, okay? We have pairs that are so volatile and others that are less volatile. As I mentioned, a market structure is what you see when you look at the market. Something else I've mentioned, the market doesn't work on us, doesn't move on a straight line. That's why you can see under the uptrend. I am illustrating how an uptrend occurs. We have an impulsive move and a pullback or a retracement. Going up is the impulsive move. Pulling back is the pullback or the retracement, okay? So let's label our market and make someone understand better. Generally, this is how an uptrend looks like. You'll realize the market is moving on the up direction. It's either the market is buying or selling. Going up is the buying. Going down is the selling, okay? Those are the simple things you should know. Let's label our market. Down there is the low, meaning it's the lowest that the market has gone according to your analysis, right? We map that with letter L, right? On the top, we have H, meaning that is the high that the market has gone so far. So we have low, high, higher low, meaning this low is higher than the previous low. Higher high, meaning this high that we are mapping right now is higher than the previous high. That's why we are calling it higher high, higher than high, lower low, lower than low. It's just that we don't write lower than low, right? So the impulsive moves, or the moves that are going upwards, are the highs. Moves that are going to the down are higher lows, right? When it comes to buying, we buy at lower high, okay, or higher low. You can't place a trade on higher high, right? You wait for the market to retrace to higher low, then you place your trade right there, okay? I think that's the easiest way I can put it so far. And let's just go next to the next market structure, which is the the downtrend market. Downtrend meaning going down, meaning the market is coming from somewhere. The market has to buy so that it can sell. The market has to go upward so that it can go downwards, right? So let me just draw how a higher low a downtrend market looks like. So on top here, where you can see my cursor, this is where we have the timelines. That way you can see we have 1 minute, 2 minutes, 3 minutes, 5 minutes. Those are time frames, right? Depending on how you do your market. For me, I analyze from daily time frame going down to 15 time frames. I take my trades to at 15 minutes. And when you're analyzing the market, don't just open your charts and jump into trades because the market is going up. That's what I used to do when I was studying, especially in my first year. I could go and see the market is going up. Then I'm like, by the time the market goes up, I should have picked something. So let me just place the trade. And that's how I ended up blowing accounts after the other, right? Though blowing accounts is normal. It's part of learning, right? So from daily time frame, hope you can see how the market is moving. It's either the market is moving in an uptrend, downtrend, or ranging market. It's a trend, not trade. You place a trade, but this is a trend, okay? So from what you're seeing right now, I have illustrated a downtrend trend. I don't know why I'm confusing between trade and trend. You'll forgive me for that. It's the accent for me, right? So that's also the choppy market. And for today's market, I told you guys to take me to 1,000 subscribers so that we start analyzing the market live. And this is my trade that I'm waiting on BTC. This is my analysis. If all goes well, we'll pack funds. We'll pack out funds. But if things don't go our way, of course, we will lose money. It's a game of losing and gaining, okay? If you don't want to lose, just close your account and go relax at home. Otherwise, losing is part of it, gaining is part of it, right? Now that we have a clue of what an uptrend, a downtrend, and a ranging market is, let's go to the chart and I'll show you practically how it happens. As you can see, this is my chart. This is the market. And I don't know what type of trend you think this is. Leave a comment on the comment section. Let me know, by the way, which trend you think is this one. Is it an uptrend, downtrend, or a ranging market? Okay, when it comes to reading market structure, go to a higher time frame. Don't read market structure from 15 minutes, 30 minutes, 1 hour. Go from month, weekly, daily. For me, I start from daily, and that's how I am able to identify market structure correctly. Okay, if you don't know how to read market structure, there's nothing you'll do in the market. Okay, so just to mention, let me start by showing you every type of market structure. Let's go back and see what we can get, okay? So from what we are seeing right now, from the point I have mapped, This is a downtrend. Why? It means the market moved from up to down. It is a downtrend, right? So to identify a downtrend, you don't need to draw lines and all those things. I'm just drawing for the purposes of illustration. But believe you me, when you look at this, you'll tell this something that is going down. The more you practice, the more you'll understand this thing. Now, from the chart that you're looking at, you can see we have blue candles, we have red candles. The blue candles are going to the upside and the red candles are going to the downside. So we have a low, higher low, a low again, and a higher low. That's why I mentioned the market doesn't move on a straight line. There's no straight line you can see here. But if you have a problem with reading a market structure, go to the higher time frame and zoom in and zoom out to see the structure, okay? That's how you'll be able to identify how the market is moving. Why do we read market structure? If you read the market structure wrongly, it means when the market is buying, you are selling. What does that imply to your account? It means just stop loss anyway. Let me not talk much. If you're going against the trend, it's definite that the market is going to hit your stop loss. So on to the next type of market structure, we have a choppy market or a ranging market. As I mentioned earlier, I don't take trades from a choppy market, or I don't analyze the market when it's choppy. So you can imagine the date that the market was choppy like this. I did not take this currency, okay? Remember, we are on the daily, meaning these are so many days, right? This is how choppy market we say it looks like. The market goes up a little bit, pulls back, up again, pulls back. So like you can't tell the direction of the market. You don't know if the market will push further or it will break and push to the downside. And for me, I consider a choppy market as a liquidity that the market has to tap and break whether to the upside or downside before it taps to my point of interest, okay? So I prefer and I advise my students to avoid choppy markets. We have so many currency pairs depending on what works for you and what you've chosen. If you have 3 currency pairs, there's no way they can all be choppy. So if this market is choppy for today, analyze another market. Okay, don't chase the market, and do your analysis and let the market chase you. That's the only way you'll pack out funds and you'll go relax, right? You don't need to take trades on daily basis. Like if you don't see anything on the market in a day, it's okay. Not every day you'll see something on the market. Not every day you'll see a setup in the market. The same way, even for shopkeepers and anybody doing business out there, physical business. Not all the days you make profits. So let me also show you where you check the pair that you are analyzing. Looking at the chart, I'm sure someone somewhere may not be knowing which currency pair is this, or where you look at this, where we have the currency pairs, okay? Okay, we have a watch list on the top right, but as long as you are analyzing a specific pair, that's where it comes, that's where the name is written, and that's how you know the pair that you are analyzing, okay? So let's go to the next type of market structure. I have showed you a downtrend, I've showed you a choppy market structure, and right now I want to show you an uptrend market. An uptrend market is a market that is going upwards, just like the structure you can see I've drawn. From the market you're seeing right now in the chart, this is an uptrend. Why is it an uptrend? From where we are, the market is moving to the upwards, meaning we are on an uptrend, right? So depending on the reason we read from higher time frame, it gives us an idea of what's happening to the market. If the market is going to the upside, we are buying, we are bullish. Remember, I told you we use the word we are bullish. When the market is going downwards, we are bearish, meaning we are selling, right? I believe today's video has helped a beginner somewhere there, or someone out there. And if you look clearly to the chart, sorry, my voice is disappearing. Sorry, if you look at the chart, you'll realize that we have a buy setup. If the market goes well, I will mention it on the next video. If the market goes against us, I will also mention it on the next video. But as long as you are in the market, I don't need to mention it. You'll definitely know if the market went according to our analysis, or it hit our stop loss. So for me, I'm more of a swing trader and a day trader at the same time. That's why I take long positions. I don't take, okay, I take trades that take minutes or hours, and I prefer doing analysis for a trade that I'll just place the trade and disappear, then come check what happens. Okay, thanks for watching. Let's meet on my next video. Bye.